All right, Shireen, thank you very much for that. So all eyes, we are just about 40 minutes away from the big announcements coming through. The markets just around 50 odd points lower, so approaching the big event with some nerves, you can perhaps say that. Our next guest on the show is someone who, of course, looks at the market in great detail and has been looking at tax in perhaps greater detail in the last couple of weeks. Sameer Arora, founder and fund manager at Helios Capital, is with us. Sameer, I think you've been talking about this even before we got to the tax experts. Do not touch capital gains tax. Are you going to reiterate that? Is that your starting point today? What's the sense? About 20 minutes to go.
Now, I'm not reiterating because the budget would already have been made.
That's true.
But I think the tone and language in the economic survey was very bad. You know, we have a slide, and I guess many other India fund managers would have this slide that India is financialization is one of the big themes of India. We recently launched a fund, and that financialization goes into microfinance and small businesses and credit cards and mutual funds and insurance and whatever. And then for them to say that financialization also is bad, it's a new line that I've heard in my life in 30 years.
But Sameer, hi, good morning. And thanks for joining us. I think you're in France, so thanks for the extra effort. And but
actually,
after what has
it's more fun to see it from far.
from far away, further away from Singapore. Now, so has the expectation after that mention in the economic survey of something coming gone up a little bit, Sameer, in your mind?
I think nearly guaranteed now that something bad is going to happen because there are 2-3 places where they've mentioned the market, and I don't understand. The normal economic survey is to lead the government towards long-term future plans on how we should privatize, how we should reduce subsidies, or whatever has been the historical thing that and, you know, in the past, every time we remember, we used to get excited about the economic survey and then the government would not listen. So hopefully they don't listen or see it even this time. But the thing is 2-3 times to mention again and again. One is to say that the market cap of India to GDP is very high. These things make limited sense where even everybody in the world says that you are not supposed to have these kind of one-line indicators to talk about market, and the market is made up of bottom up this thing, and to come up with these simple one-liners that the market cap to GDP is high, or to say in an economic survey that speculation in India is high. What is speculation? If you open 3 casinos, the speculation would go there. So nobody says that the people going to a casino are very high in US or things like that. These are all our own creations. You can tune them, fine-tune them, tax them, stop these weekly settlements. You don't have to put them in the economic survey.
Right.
But the worst one is to say financialization has gone too far.
Sameer, what is the...
It is one of our slides that it has just started 3-4 years ago.
Sameer, what will do the least damage? What will do the most damage from a capital market taxation perspective? Because you're saying something is coming.
So my expectation now is, based on our discussion internally, just randomly, that what can they do and try and balance everything is that they change the tenure to 2 to 3 years of the short term, which will be very bad because that effectively would, and then change the tax by maybe 5% here or there, make it 15 or 20, still keep the long term at 10. So keep telling the world that we have not changed the long term capital gains tax, but you have changed the tax rate for the country by 5-7%.
Sameer, my sense is their fear was not so much about the market levels, because it is in some areas where the market levels are high. Their fear is more with F&O volumes. So
F&O volume is not worthy of an economic survey.
No. Wo chodo aap. What can we expect today if you think...
Yesterday I was also calm. But then suddenly
Sameer, we are only 15 minutes to the 0 hour. So I'm asking you, if the fear of Nirmala Sitharaman is, F&O volumes are very high, is there anything she can do?
That she doesn't have to do. SEBI can do by even
so
not
you don't
even
expect
directly
anything.
do. No, you can even tell the exchanges not to come up with these weekly settlements. You don't even have to say it in a, like a formal say. Just tell them we will not approve or whatever. Or I don't know whether approval is needed. But that is not a budget-worthy item.
Okay.
You can say a little bit, but you can't separately. What can you do?
Yeah.
Okay, Sameer, stay on. We have to take a very quick break. 15 minutes to go. We'll also have Dinesh Kanabar back with us. We'll have Ashok Wadhwa joining in this discussion. 15 minutes to go till we hit 11.
Okay, well, 13 minutes to go for the union budget. 11 o'clock, the finance minister will stand at the floor of the parliament and start presenting the budget. We'll, of course, await details. Samir Arora is with us at Helios Capital, all the way from France. Samir, you've scared all of us good here. Something bad is coming, you've told us.
No. See, I'm saying I was quite happy on my holiday here, but that economic survey put me off a little bit, yes. So I tell you what I feel, alive at the moment. So it looks a bit bad.
I got it. But, so let's just assume that nothing on the capital gain, nothing comes. Taxation is not tinkered because, exactly 6 months from now, you got another budget. The next one, right? So this is the middle of the year. So there is also one logic being given that why do something like rationalization of capital gains now? So let's just say nothing is touched there. What is the market really looking for in terms of queues, etc.? There will be a vision statement for the next 5 years. Since it's the first budget of the NDA 3. What are you watching out for?
So I think rest of the budget will be actually good. Good, by good we mean that I don't think it will be populist. A little bit on the margin is okay, because that populism can be shown via state elections, state budgets, rather than having to do it in the central budget. The other thing is that there will definitely be some relaxation on tax rates for the taxpayer. That means either change the bracket, increase it from that 7 lakh to, I don't know, 9 lakh or 10 lakh or whatever, or tinker a little bit here or there. And that would be generally not counted as populism, because some of that is fair over time as inflation goes up. And I think the other thing is that the extent of which you were discussing in the panel discussion just before this, that there is more investment required of the private sector. And we can see it already of the state-owned companies, the PSUs. The PSUs are making big announcements on investments, which means that the government is basically saying, now you make on your balance sheet rather than us making that, because maybe there are more demands on the central budget. But the budget per se, ex-tax, I think will not be bad. It could be not greatly good, but at worst neutral, which itself is also good enough as far as the market participants are concerned, because the market generally is doing well. So as long as plus minus that it moves on, it's okay in life.
So let's hope that, it's not all bad. Very quickly going to